Good morning, everybody. Happy FOMC day. It's Wednesday, September 28th. Markets are currently off to a green start. NASDAQ right now is up by 0.3% for the futures market. Got about 3 minutes till market open. And it looks like a pretty bullish trend in the pre-market. It is giving up a little bit of that. Trading all the way up to 15.4. Sorry, my computer's being a bit slow here. My Thinkorswim app is just not pulling up anything. Let me close out of a few things. Hopefully get it running a little bit quicker. Alright. So NASDAQ currently trading at 15,423, peaking at about 15,440 it looks like. It's about a 20-point pullback. Watching one stock today with Google. Looking for some downside. Yesterday we saw it all the way down to 137.50. Ended up catching support in this demand zone. But my guess, if we have a bearish day because of FOMC, this will definitely end up breaking that. Finally ending the monthly highs that Google has been at for the past 3 trading days. Good morning, Dixon. Welcome. Hope you're ready for FOMC. It'll be fun. And by the way, if anybody knows app developers or somebody that can help with funding in order to start an app, if you could reach out to me either through Discord DMs or I'll send the email. In the chat. Currently looking to develop an app for trading in influencers and followers to try to connect them. So won't go into too much detail here, but I'll give you all the info you need if you email me there. But yeah, Google coming down this 5 minutes pre-open at 138.70. Dude, my freaking app is just so slow. So much lag right now. All right, here we go. Opening lower. Coming back into the range that it was at before. These contracts are about break even though I purchased it when Google was trading at 139. They've lost a little bit of their time value here. But I'm hoping we slip back under 138.25 and keep on pulling until FOMC starts. That way we get the best opportunity to the downside. Looks like we're seeing a few names pulling back here too, not just Google. Netflix about 0.5% of the red. Wow. I don't know if it's Thinkorswim servers or if it's me, but my app is just super slow today. I'm going to try to pull it up on my phone, see if it tracks it a little bit faster, because it's kind of spooky, as slow as this is. Looks like everything's going in the red now. Besides Amazon's up 0.25%. Good morning, welcome. right, here we go. Google entering the demand zone. Contracts are trading for 240. I would think that the implied volatility for the contracts would be a bit more considering we're going into FOMC. So I think that they're inflating the value a little bit, but still gaining that support at 138.25 for the moment. Seeing a few names going back into the green and rebounding. Hopefully, it's not a day like the last 2 days where went up, went down, and just kind of chopped around. But my guess this morning might be more of the same, given that people are undecided on how the Fed is going to impact the markets today. We're going to get the summary of economic projections. So basically, they're going to tell us where they expect interest rates to be in the long term. We already know that we're coming close to the top for interest rates, but they're going to give us guidance on how long they're going to keep interest rates as high as they are. So that'll have some impact probably on the long-term treasuries, which people have been focused on very keenly recently, with a 10-year trading at the highs nearly at 4.325 right now versus 4.365 at the peak yesterday. So people are definitely tuning into this FOMC day. Looks like we don't have anything that's moving around a ton. Your biggest mover to the upside is Amazon at 0.5%. Your biggest mover to the downside is Nvidia, only down 0.3%. So no major changes this morning. We do have a decent sized pullback on Apple, started at 179.70. Just missing the 180 mark before that pullback. Probably into this demand zone again at 178.50. Live for the Fed minutes, or live for the Fed meeting. Yeah, I'll be live for that. It'll be at 2:30 is when the press conference is. All right, looks like Google, well, it was one of the biggest losers, but it's only down 0.1%. So again, we're just not seeing much change in the market. Amazon's actually doing pretty well. Yesterday was beaten pretty bad. It's not too shocking to see it up 1%, but definitely getting saved from that huge fall yesterday morning. Just looking at the 5-minute chart for Google, definitely coming down, but again, that support at 138.25 was strong on the first touch. Good morning, Crypto Panda. It didn't spend much time at that 138.25 level yesterday, though. You really had 3 touches of it. First thing in the open, second at 10:45, and then again here at about 1:20 in the afternoon. Yeah, pretty mixed market, but mixed and flat market, I would say. And biggest runners, Amazon up 0.9%. Coming back into the place where it sold off yesterday morning. Tesla's looking pretty. Let's see. Tesla's at 267 again. Oh, I thought it was 277. I was about to say, if it's closing in on that 280 price target again, could be a decent sell, but 270, not much going on there. Let's check on the hourly chart here. Yeah, there's some resistance in this area, 267 to like 271, 272. It's pretty thin though. Checking out Google for the hourly chart. Again, this one's still trading in that high range on the monthly time frame. And it's just trading back and forth in this area between 137.25 and all the way up at 140. So my guess, if we have a bearish reaction to Fed today, we'll end up clearing that 137.25 mark. Hopefully heading into the next range, the bottom of that would be at 135 flat. So a lot of opportunity contingent on a bearish reaction to FOMC. So far, Google's the worst performer, but it's only down 0.25%, so it's not anything major. And it's sitting right at 138.50, so about 25 cents off of the demand zone. And Apple is right behind it, down 0.3% for the day, trading at 178.50. Similar kind of situation, sitting at that demand zone. Looks like Amazon just cleared the 1% markup at 139.10. Resistance should be 139.50, where it started yesterday before the huge sell-off. Tesla printer goober. Let's check. Meta's popping off here. Right over that 306 mark and headed to 308.75, I would think here. Another dollar move to the upside, potentially. Seeing a lot of these names rebounding on that opening dump. Some stronger than others. Google and Apple being the two laggers in that rebound. Considering the last couple of days for Apple, it makes sense for it not to be jumping up with joy at the supply zone or at the demand zone. Puts an Apple could be good here with the stop at the top, maybe like 5-10 cents above, just to give a little leeway. Yeah, there it goes down. So yeah, puts on Apple, if you have it at like 178.50, say your stop loss at 178.60, you should be fine on that trade. Judging where it's going to go down to, it's going to be kind of hard to get too far down in this choppy market that we've had in the last couple of days. So my estimate would probably be first level of support, and I would probably call that 178 from the base that it had in the after hour session on the 20th. Looks like we're just getting more of the same on Google today. That chop. Do I have any preference towards calls or puts? Not really. It just depends on the individual name and the prices that it's trading for. So, for example, right now, if you're following the trend on Amazon Meta, you would want to be bullish, obviously. You'd want to set your stop losses. I usually set my stop loss like anywhere between like 25 and 50 cents away. So it's, pretty close by, so I don't lose a lot of money. But for example, right now, Amazon is in a bullish trend. I would want calls on this with a stop loss, maybe at 138.90. Give that demand zone a little bit of, wiggle room. And then I would want to ride that up to, say, 139.50 for take profit. If you're looking at other names, if I want to take a bearish trade on any stock like Apple, we were talking about earlier, was a really good short at 178.50. Right at the top of this wick. Right at the top of this wick, you would have set your stop loss for like 178.65. Let's see. Okay. Well, looks like we are still on. Sorry about that. My power just randomly cut off all of a second. But markets are still open, so right now I'm just streaming off the hotspot on my phone, so it might be a little bit shoddy here and there, but we'll try to get through this morning session. And then we'll have our 2:30 live session. Yeah, right now Apple's going down at 178. Ended up tagging that support level and bouncing right off. So anybody who took profits there should be sitting pretty right now. Granted, it was only a 50-cent move, so not huge delta returns. No, it's me. Hence why I don't have any good lighting in here, and connection might be slow. Google just chilling at that 138.50 mark, not really changing much, but it does kind of look like we have a reversal in store right here at 138.70. So maybe a new lower high for this morning. Been tough for the last month. So I've been pretty profitable. I had a good 10-day win streak where I ended up making like 8,500. I had a couple days where lost 2,000 each day. So right now I'm sitting probably at about $4,000 in profit for the month of September. I've been putting up a lot more capital than I usually would, but I've been using tighter stop losses lately in order to kind of mitigate that risk of the higher capital allocation. So it's been pretty good. I mean, it could be better without those two $2,000 losing days, but both those days, it just seemed like every single trade was a stop. And that is pretty common, especially with this kind of choppy market that we've experienced. So yeah, I'm hoping this Google trade has a decent payout, because my thesis is it goes down. If it finally breaks this range to the downside, it goes down to 135. It's a 138 strike price, so they would have probably about $3 of intrinsic value. Extrinsic value, it's kind of hard to determine since it's like a 2-3 week expiration, but I would think that they would probably go for a good 400 or 500 a piece. And we bought them at 215. Oh. Yeah, I've been sizing up the positions pretty decently. About 1,000 of commission and fees. Yeah, I pay about $100 a day in commission and fees. I trade around 100 contracts. I haven't taken on any trades today, so I shouldn't have any, but I guess once I sell out of these Googles, then I'll have to pay that. And Google 138 calls. If you go below the pre-market low, 138.25, I'm assuming that is. Yeah. I mean, I would want to set that, if I was you, I would want to set that just a little bit lower, maybe at like 138, 10 or something. Give yourself a little bit of breathing room, just in case, you know, you do see people getting stopped out at 138.25 and then it just shoots right back up. Right now, it's just below the 138.25 mark. So this will be a good entry into those 138 calls, and then you would set your stop loss at 138.10. That would be my strategy, at least. So again, just like very, very tight stops for me is my methodology. Like 15 cents would be my stop loss. Oh, Google. Googl, not Goog. I've always found that funny how they have two different ticker symbols. It's because of a stock split they did. But I don't know why they don't just list it on the same and combine the shares. Do I confine my trading to only 8 to 10 stocks? Yeah, so I only trade these names here. Meta, Amazon, Nvidia, Tesla, Microsoft, Netflix, Apple, Google, right? These are the only stocks that I trade. Just the reasoning behind that, they're, you know, the biggest stocks on the market. They have ample liquidity in order to get out in and out of your trade without any problem. And you know, sometimes they can have a decent amount of volatility. I mean, right now, Google doesn't have a lot of volatility. But once the stock actually starts moving, you can see huge returns. Like Amazon yesterday, whenever it fell $2, you would have made a shit ton. And I prefer trading these names, the individuals, versus QQQ for that reason. You're going to get more delta change out of the individual names than you'll get for QQQ. Like you might see QQQ move 50 cents or $1, whereas you'll see Google move something like, I mean, so far this morning it's moved down $1.50. So there's a lot more money to be made or lost, obviously, with these individual names. But Google just went under 138.10. falling pretty quickly. Contracts are trading for 240. Again, I bought them at 215. So right now we're up 400, which it's not bad, but nowhere near what I would take profit at. Only trade Tesla options. Balls of steel. Looking to branch out into other names. Yeah, and the reason why I have, 8 stocks listed instead of just trading Tesla is because sometimes you just get wound up in these really tight ranges like Tesla is in right now. Whereas I can go through my stock list of 8 companies and find one that's actually moving for the day. So, for example, like Amazon, pretty decent morning in terms of how much volatility it's had compared to what Tesla's doing right now. Or Meta, for example, is in an uptrend right now. So it just gives you, more to choose from rather than just one stock if it's just dead flat for the day. What gave me the decision to size up? Do I find it easier to trade with greater size? So it just comes with bigger returns, obviously. I usually, on my winners, average between 15 and 30%. So if I'm using, say, $500 of capital, which is what I used to do, I'm only going to get like $150 of profit out of that trade. So is it really worth it for me to put in all this time in order to make $150 for me? No. I'd much rather put up $3,000 in capital, usually risk like 10% or so $300, with the potential of making like $1,000 if the trade goes right. Hey, Space Pete. So that's why I started sizing up on my trades. All right, Google's trading at 138 now. Pretty decent drawdown from 138.75 to 138.75 move down. Pre FOMC, I would probably want to see 137.25 before I take profit. But not 100% sure if we'll do that. Because again, I think that this has a potential to really make some bank. If we finally get out of this range. That's the problem that we're stuck in right now. It's your birthday, you're off, but you're scared to take a trade. Can't blame you with the last 2 trading days and FOMC day today. The markets have been pretty, they're volatile enough to where they're not trading flat, but they also are trading flat at the same time. I feel like it's the best way to describe what's been going on the last few trading days. How long have I been trading? I've been trading, it's been, I think, 7 years. 2016 is when I started trading. Wasn't serious. I was only like 20 years old at the time. Had like $1,000 to my name. So, I wasn't exactly what I am today with, $30,000 in capital, trading around. I would say I was very ambitious though, back in the early days, thinking I could turn like 1,000 into like 100,000 in like a year. But it's been 7 years and we've got 30. So trading is definitely not a get rich quick kind of thing, like I thought it was in the beginning. It's fun though, I would say. All right, we're trading really well on Google. It's all the way down at 137.70. I'm curious what the contracts are going to go for if we hit the low of yesterday with all this added implied volatility from FOMC. Why did I decide to create a Discord channel? So I think Discord, it's a really good place to like connect with other people that are in your niche, right? YouTube, you can connect with people, but you can't, like, it's a lot harder to connect with people on YouTube. Like, they don't have a direct messaging service. You can make community posts, but actually engaging with that is just a lot harder than it is with Discord. So for me, Discord was just a place to better connect with the community of traders that I have there versus YouTube. Like, I just don't think that YouTube fosters community as well. I mean, these live sessions can foster community, but it's only for an hour at a time versus Discord is 24 hours a day. Google and Apple are going head to head for the worst performers today, both down 0.75%. Yeah. That's awesome. Another place you could visit for like an online trading community. I mean, obviously Twitter, it's a little bit harder to navigate, I would say, but if you want like a specific place to communicate with other traders, you could go with FinTwit. Or not FinTwit, what is it called? StockTwits. It's a pretty toxic community, I would say, but trading community nonetheless. Yeah, I feel the same way where I'm living. There's not a lot of fintech in my area. What's my typical monthly win rate? I would say it probably hovers anywhere between 40 and 60%. 60% would be a good month. 40% would be like a poor month for me. So around 50%, the winners are usually, 2-3 times larger. So as long as I keep that risk reward in check, then it'll be profitable using the strategy. That's why I use such, tight stop losses in my trading. It makes it more likely that it's going to get hit. But, I can take 3-5 losses and pay that back with one win. Yeah, exactly. That's what I've kind of learned. Really kind of got the idea from like VCs, because with venture capitalists, there's a very high chance that all the startups that they invest in is going to fail, but you need that 1 out of 30, 1 out of 50 that ends up succeeding in order for the fund to break even, and then like 1 in 100 will give you like a 5 times return. So you're really just searching for those big winning, high reward, lower risk trades for me. That's the way that I think of trading. And sometimes it can take a long time to see any kind of pay out using that method. Like yesterday or the day before, I ended up taking like 10 stop losses before I had any win. So it can be very frustrating and very destroying to your ego, but that's just the way that I like to trade. New high for the day with Tesla. Yeah, it looks like Google's just kind of sitting here right now at 137.70. I think this was the support yesterday, if I remember correctly. It's a little bit lower, actually, 137.60. So if we break through here, I think we're revisiting 137.50. And hopefully we get into the bottom of this demand zone at 137.25. Okay, so yesterday these contracts were trading for 280, and today they're only trading for 270. So I guess the implied volatility actually hasn't driven up the prices for these options at all. Interesting enough. Yeah, I think it will. I think that the market's last few trading days have just been going back and forth, waiting on the decision by the Fed. Now, the decision itself is pretty clear. The Fed isn't going to raise rates at this meeting. I think they've made that amply clear. I think that they should raise rates, considering the rise of oil has been mind-blowing recently. So inflation is going to kick back up. If you're looking at the price of oil right now is at $90, whereas it used to be like $70 just a couple months ago. So that's just going to kind of feed into the inflation. It really feels almost like, I mean, I wasn't around, but it kind of feels like the early 80s where you had that start of inflation, you had interest rates going up. But that's where I think the economy is kind of in right now, which is called stagflation, which is probably the most detrimental to the consumer, which you would think that would kind of weigh down on equity prices. But to me, it seems like all of these job cuts we've been seeing in the tech industry, people are just kind of loving that, cutting costs and just sending equity prices higher. Bank of England and Bank of Japan likely to ripple effects. Yeah. All right, here's Google at 138.25. The contracts are only trading for 280. So even though we're 25 cents lower than we went past the low yesterday, these are trading at the same price. That kind of sucks, but very nice drawdown though. We're seeing a few names creeping into the red now. Meta's only up 0.8% instead of the 1% it was up earlier. But we're very, very close to the 137.25 level, which puts us in a really good place ahead of FOMC. All right, we're below 137.25 and continuing the downtrend. Contracts are trading at 280 pop. Oh gosh. So pulling up on the hourly chart, let's see if we have any supports between here and the next. 136.20 seems like that could be some support, maybe 136.50. So 136.25 to 136.50 will probably be your next support here on Google. Now it's clearly setting it itself apart from the other performers. Apple down 1% and Google's down 1.1%. So making it the big loser of the day right now. Meta's pulling back only up 0.5%, so this should kind of feed into Google going down some more if the rest of the market's pulling back. Contracts are trading for $2.90 a piece. I would say we've pretty clearly broken outside of, maybe not yet. Maybe we can't call it yet. Maybe under 137 we can say it's out of the range. But it's getting very close. Yeah, catching support right at that 137 level, so it's still in the range. Talking about Tesla, TSLA, currently the biggest gainer today, up 0.5%. Meta just lost its position as the biggest winner. But yeah, it looks like a decent uptrend that it's got going so far. I don't know if I would really call that an uptrend, though. I don't think that high was significant enough in order to call it that. I would say it's kind of just chopping with... Yeah, I would say it's chopping, but in an uptrend would probably be the best description for that. Like a very slight uptrend. Yeah, exactly. I don't know if I would want to take the opportunity myself. Lots of volume coming into it, which is good. Google's trading right smack dab at 137. So damn close to the break in the range. Apple's down 1%. Google's down 1.3. This is not financial advice. Do not take my trades. Yeah, if I were to want to set up here, there's some support. I would say your entry, well, it's at the entry now. 267.50 would be an entry. Maybe with your stop at 267.10, and then you would want to take profits above the highs if it breaks at 268.50. So you have about 40 cents of downside and about $1 of upside. So about a 2-to-1 risk reward, which is not bad, but and you're calling for 271.50. I'd say that's pretty far for today. Maybe after FOMC, I could see that happening if it's bullish. All right, Google just slipped 137. Let's get out of this range now. Contracts are trading at 300 apiece. I hope we just get a clean break at the 137 level, instead of just going back and forth. My guess, if it doesn't end up breaking the 137 level with any sort of big move, you're just going to trade between 137 and 137.25 till FOMC. So I probably want to see a break at 136.80 or so in order to say the 137 level is done. At or below 137.80. What's on the table for discussion at FOMC? So they've pretty much done all of the raising that they're going to do. There's a possibility that Powell will hint at another interest rate increase of 0.25% because that's what the Fed has outlined in their summary of economic projections. So if he hints towards that, right now the markets don't expect that. They're expecting the Fed to be done at, I guess the last meeting when they raised 25 basis points. So if he ends up hinting at another 25 basis point increase, that could be bearish for the market. Most likely they're not going to raise rates. We already know that at this meeting. But if he signals any sort of rate increase by the end of the year, that would be bearish. If the summary of economic projections signals higher for longer, that would be bearish. Let's see. I'll actually pull up the FOMC countdown tool. So this will tell you where the markets expect interest rates to be. Looks like Google just ended up bouncing at 137 right now. But this will tell you where the markets expect interest rates to be. So at this meeting, there's a 99% chance that they're going to stay the same. At the next meeting, there's only a 30% chance that they're going to raise. And then for December, there's a 35% chance that they're going to raise. So, decent odds of raising before December, but not solidified. If Powell ends up solidifying that, that is going to end up raising the short-term rates, the 2-year Treasury bond, which will have a negative impact on the market. Next important thing would be the long-term projections in the summary of economic projections. So that would be looking out to December 2024, 2025, and beyond. So right now, they're expecting the Fed to actually drop interest rates from December 2023 at 525 to 575, all the way down to 425 to 500. So they're expecting anywhere between 100 basis points of cuts next year to just 75 basis points. So if the Fed doesn't kind of cave into that in 2024, if they're projecting, keeping these interest rates at 5.5 for the next year, that would weigh negatively on the markets because that will raise the long-term Treasury rates, the 10-year. Right now, it's already trading at the highs at 4.325. So if that keeps going up, it's going to weigh negatively on the equity market. But yeah, it looks like Google just caught support at 137. Back up to 137.25 right now. You wish you understood more about interest rates. It's just all about kind of reining in what they've done over the past 20 years. So they've kept interest rates basically at zero for 20 years on end. People were taking out a ton of debt in hopes of paying it off in the future. And now that they're raising the interest rates, people aren't going to be taking on as much debt in order to fuel their ventures. Like, buying a home has gotten, I think, twice as expensive as it used to be with lower interest rates. What else? Like buying a car, interest rates have gone from like 2-3% to like 7% for like a new car, or 5 to 7% for a new car. So people are going to be spending less money because they have higher interest payments, and lending practices are going to get tighter because of the high yields. What do I think of the Oracle tumble? Oracle, ORCL. Oh, wow. So they have their earnings. Pretty decent drawdown on earnings. 119 earnings per share. What was expected? 90 cents expected. So they beat earnings. But their earnings is declining for the past year a little bit. So, they probably don't have as rosy projections as they used to. I feel like a lot of Oracle's rally was driven by artificial intelligence. And to me, at least, I feel like AI is very bubble-esque. It's been around for us forever. Like ChatGPT's definitely a great iteration on previous chatbots, but I don't think it's that much of an advancement to, create billions of dollars in valuation for all these companies. Like, there was one company that literally just had a website and they were valued at, God, I don't even remember. They were valued in the billions of dollars just for having a website. Granted, they were tech engineers at Apple and all the big companies, but still, I feel like this space is very overbloated. Yeah, exactly, altcoin. Reduces inflation through demand destruction. All right, so we got a new high in at 137.40 before pulling back here. Hopefully we crack the 137 level, but my guess we just go back and forth. Contracts are trading at 290, which is a decent gain for my 215 entry. But I'm still thinking we slip 137 after the Fed and go down to the next range, which puts us at like 135 at the bottom of the range. Looks like stocks are kind of starting to stabilize now. It's been about an hour of trading, so I don't think there's going to be any news between now and FOMC, so markets are probably just going to go back and forth until then. That would be my guess, at least. Stabilization, accumulation before the launch. Yeah, exactly. I wonder how they're betting on the markets today. So it looks like QQQ has come down from 371.40 down to 369.85. If we're looking at the open interest and volume for today's expiration, September 20th, there's a lot more calls that are out of the money. 30,000, 39,000, 14,000 versus open interest on the puts 6,000, 5,000, 6,000, 6,000. There's nothing really that amounts to that kind of. Oh, that's the volume. Okay, so there's only slightly more volume or more open interest for calls. 8,000, 8,500. But the volume is 30,000, and then for puts is about 35. So a little bit more skewed to the downside at current levels. All right. So yeah, I think we've probably seen the majority of the move that we're gonna get until FOMC at 2:30. So I'm gonna head off, and I'll catch y'all then. See everybody. Have a good day.